and the phenomena started. And in total, about 105 million non-transactional things, things that are not, Bitcoin layer 2 or escrow or direct payments, so things you would normally think about Bitcoin. Because some of them are kind of like color coins. So they're actually representing meme coins, but on Bitcoin. So the kind of things that happen on some altcoins where they just post a meme, they run the price up and then it dumps and then they do it again. And some of the offshore exchanges make markets in these.
Bitcoin's dealing with a new kind of spam, and it has nothing to do with email. Adam Back says people are now filling the blockchain with data that has little or nothing to do with real transactions. According to BitMEX research, more than 3.5 million images and over 100 million pieces of non-transactional data have been uploaded to the Bitcoin blockchain, most of it in just the past couple of years. These uploads include memes, meme coins, and other speculative projects, the same kind of short-lived hype cycles usually seen on smaller altcoins. Offshore exchanges even create markets for these tokens, fueling brief price spikes before they collapse. Back notes that this behavior used to be rare on Bitcoin because its users weren't interested in meme-style speculation. That's clearly changed. He explains that there are two main types of blockchain spam right now: image spam and color coin spam. The images aren't individually large, roughly 10 kilobytes each, but each one occupies the space of about 10 to 20 regular Bitcoin transactions. That bloats the network and drives up transaction fees. Still, Back says there's an upside. The Bitcoin fee system is doing exactly what it's supposed to, forcing users to compress and optimize their uploads. The higher the data load, the higher the fee, and that natural economic filter is how Bitcoin keeps its network honest, even when people try to game it. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
Yeah, I think it's more about the way that the Bitcoin network can deal with spam. And so not email spam, but I presume people have realized that there are people putting non-transactional things in the Bitcoin blockchain, which are, consuming, in the image case, a lot of space. So BitMEX research put out, some quite interesting data. I believe there are around 3.5 million images in the Bitcoin blockchain, the bulk of them in the last 28 months since the inscription and the phenomena started. And in total, about 105 million non-transactional things, things that are not, Bitcoin layer 2 or escrow or direct payments, so things you would normally think about Bitcoin. Because some of them are kind of like color coins. So they're actually representing meme coins, but on Bitcoin. So the kind of things that happen on some altcoins where they just post a meme, they run the price up and then it dumps and then they do it again. And some of the offshore exchanges make markets in these. And so historically, those tended not to come to Bitcoin because Bitcoiners generally weren't interested in them. So it wasn't attractive to try to do that. Those two types of spam cause different problems. The image spam just wastes space, like it displaces, 10 to 20 transactions for each image. Interestingly, the images are not actually that large. Working backwards from BitMEX research data, it looks like the average image is around 10 kilobytes, which is not actually that big in image terms, right? That suggests that somebody put some effort into, cranking up the JPEG compression and things like that and using a low resolution to even fit an image in that amount of space. So that suggests that the native sort of mechanism for the market to access Bitcoin block space, the fact that the fees are market set to use Bitcoin and the fees are related to the size of the transaction, is actually working, right? In a sense that they are, the behavior is being modified by the cost, let's say, right? So for the images, that seems to be the case. So I thought that was interesting because, I've only been digging into this in the last couple of weeks because there was stuff going on and I thought I maybe could try and understand the technical details and explain it to a wider audience because the internals of Bitcoin protocol are a bit esoteric and hard to understand. And I interact with people on different ends of that can understand technology. but I also interact with, the average people as well. So I thought I could try and help sort of smooth out the gaps in understanding and hear viewpoints about why people wanted different things. So, and then the problem with the kind of color coin like protocols, and there's a bunch of them, and they go back years and years. So there's Omni. I think that was the first one. Do you remember that? It's a way to send stablecoins originally, like Tether, I think, on Bitcoin. But I think it also got used for other. Actually, I mean, it was the kind of first ICO, I think, Omni, and then it stores data on top of Bitcoin, so it's a bit space inefficient. And then there's counterparties, a different variant, and then more recently you have you have RGB, which is kind of color coins concept, but Lightning compatible, and Taproot Assets, which is a competing color coin Lightning compatible. And then you have these kind of more meme coin protocols, BRC20 and Rune, and there are probably more, right? I'm not remotely interested in playing with these kind of scammy sort of pump and dump kind of meme games, but that's what's going on. And now the effect is that people are, particularly in the last 28 months since the inscriptions, of course these things went for years before, they are creating a lot of transactions, and of course people get rug pulled. They end up with a coin that's not really worth the fees, and they just abandon it. So there are millions and millions of never going to be spent UTXOs, which clogs up the Bitcoin UTXO set, and that matters a bit.
Adam Back says some people enjoy embedding images in the Bitcoin blockchain as collectibles or simply for fun, but he sees it as wasteful. Images, he argues, don't belong on-chain because they consume too much space that could be used for real transactions. A smarter solution would be to store the image elsewhere and keep only its cryptographic hash on the blockchain. That preserves proof of existence without clogging the network. When it comes to other forms of non-transactional activity, Back says things get more complicated. Meme coins, for example, are mostly noise, tiny Bitcoin transfers representing speculative tokens with no lasting purpose. But other tokenized assets, like Tether or digital representations of shares and bonds, have legitimate economic use. They enable real financial transfers across borders, so calling all of it spam oversimplifies the issue. This is where the Bitcoin community splits. Some purists want to block all non-standard uses to preserve the blockchain's efficiency and integrity. Others argue that as long as the activity provides economic value, it deserves to exist on-chain. Back says deciding where to draw that line isn't easy, and that tension reflects Bitcoin's growing role as more than just money, but as infrastructure for value itself. Let's get back to the interview.
The image spam, I would say, is, the people that like it as a, aesthetic thing or a collectible or something, right? But personally, I think it's, ridiculously inefficient, and they can store the image somewhere else and put a hash of it in the chain. So that's my viewpoint. So I think it's much less controversial to say the images are spam and shouldn't belong on the time chain. But the transaction things it's a spectrum. So of course, there's a lot of meme coins. They are economic, but they're not really Bitcoin centric, right? They're transferring tiny amount of Bitcoin to represent some tokens, right? But then there are, some of these other protocols have real things in them, like Tether and shares and things like that, right? So there's a full spectrum of things in those. Some of them have, and then, so let's come back to just a kind of survey of what's going on and what the impact is. And then, people have different views. Some people will be more aggressive. They want to stop all spam, right, of any kind. And others are thinking that, well, you shouldn't get too judgmental in terms of, if somebody's transferring a tether, maybe you don't want to block that, right? That's been going on for many, many years, over a decade, right, in some of those protocols. And it's also available in some of the new protocols, like I think RGB and Taproot Assets have probably Tether or are planning to, right? And it's not just Tether. There will be, companies that have issued shares with a technology company helping them, shares or bonds or what have you, using some of these carriers. So it's a bit of a gray area. If you declare them all spam and you want to stop them, now you're making a judgment about what's legitimate, right? So I think that gets a little slippery. Right. But in either case, the side effect is it's clogging up the nodes. Yeah, firstly on the points about software safety. Some people were critical about Michael Saylor's comments, but for myself, I've been involved with computer systems, architectures of peer-to-peer systems. I implemented 2 peer-to-peer systems. One was a censorship-resistant kind of distributed web. Another one was, so that was a kind of open source thing in the 90s. And then more recently, before Blockstream, actually, I was working in a startup where I was the implementer and architect of a peer-to-peer layer to transport kind of business collaboration. So, think about it like Dropbox or something where you can drop files and exchange messages, but it's using the infrastructure of the participants as peer-to-peer, right? So, if you've, and I also used to run an anonymous remailer, which is a way to send anonymous email and anonymous messages to Usenet discussion forums, and actually running that and getting spammed was how I came to invent Hashcash, because people were trying to abuse it. And I think that, people are probably losing track of the operational risks of running peer-to-peer software. So, running a remailer or running a Tor exit node, you are, it doesn't exist if there aren't volunteers running it, right? And yet it's something that governments, law enforcement often don't like and would wish would stop. And of course, anything that's on the internet and providing anonymity or self-sovereignty is going to get abused, because any internet protocol can get abused. And, frankly, if somebody's going to do something problematic, like, try to hack something, they will probably try to cover their tracks by using Tor or proxies, right? So, while you are by intent providing, self-sovereignty and privacy for, individuals just for their liberty, or human rights activists and things like that, it's also going to get abused by people doing bad things. It's quite clear that intelligence agencies also use Tor, and some of it's even funded by one of the US agencies, or co-funded. So you can see that there is a mix of people in there, and a lot of establishment dislike of what's going on. And so if you operate one, there are people that basically had to get they're running it in their basement or something, a remailer or a Tor exit node, something, aggressive was sent through it. And, next thing, the law enforcement turns up at their house and they have a multi-year legal battle on their hand where the EFF is, funding their legal defense fund, basically, right? So
Deep inside Bitcoin's code, a quiet tug-of-war is unfolding over what the network should truly be. What began as a peer-to-peer payment system has evolved into something much messier, a digital canvas where traders, artists, and speculators all compete for space on the same chain. The result is a blockchain filling up with experiments that blur the line between innovation and distraction. Every block now tells 2 stories, one of economic revolution and another of human creativity spilling into the cracks of a financial protocol. Yet this debate goes beyond data size or transaction fees. It's really about purpose. Should Bitcoin stay pure to its roots as hard digital money, or expand into a global settlement layer that records all forms of value, art, contracts, even digital identity? The fees rising with congestion aren't just market signals. They're reminders that freedom on a blockchain always comes with a cost. Too much restriction, and the system stops evolving. Too much freedom, and it risks drowning in its own noise. What this moment reveals is that Bitcoin is no longer just a tool. It's a living experiment in digital ownership and economic expression. Its users are deciding, block by block, what kind of civilization they want to build on top of math and code. As the world watches this tension play out, one question lingers. Can Bitcoin remain a symbol of financial independence while also becoming the world's most contested digital canvas? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.